Welcome back to my channel, fellow investors. In this video, I wanted to cover a consumer staple company by the name of Kimberly-Clark. This company produces products that we find in our homes, whether it be paper towels, toilet paper, tissue paper, whether it's diapers for little babies or adult diapers for people that need them. They get into respiratory products for respiratory masks and just a long list of paper-based products. This is a consumer staple, so it's a consistent company, doesn't grow too fast, doesn't contract too quickly. It pays a nice dividend of 3.6%. The company announced their earnings a couple of days ago, and the market really liked their earnings. The stock went up nicely. I wanted to take a look at the fundamentals of the company. I wanted to review their earnings report, see what they had to say, see what their guidance is all about. I'll take all that fundamental data and put it into my valuation model to arrive at a value that I believe Kimberly-Clark is worth. I'll take all that information and make a decision whether I'm going to buy more shares, hold, or sell my shares in Kimberly-Clark. I look at three areas. First, it's all about the company. Do I want to be a part owner in this business? Second, I look at the balance sheet. Is the balance sheet in good health? And third, I look at the discount available on the stock. Stocks tend to go up and down, and I like to buy when a stock is discounted. I'm a value investor, and that discount is important as I enter a position in a particular stock. Keep in mind, I'm sharing my individual investing journey, how I look at companies, and how I'm going to invest in a company like Kimberly-Clark. By no means am I providing any financial advice, and I'm not recommending you buy Kimberly-Clark nor sell Kimberly-Clark. Now, let's take a look at Kimberly-Clark and go through their fundamentals, their earnings release, and then make a decision on whether I should buy, hold, or sell. The Kimberly-Clark stock is doing well this week. After the earnings were announced, the stock went up nicely. It's up 8.67% in the last 5 trading days of the stock. If we look at year to date, the stock's up 15%. Really nice upward trajectory on the stock in 2024. They also pay a 3.6% dividend. So that's a nice combination of appreciation and the stock pays a dividend. Looking at the 1 year, the stock is actually down 3%. So you can see that Kimberly-Clark not too long ago offered a really nice entry price below $120 per share. So that proves my theory that I look for really good companies and then I look for the right time to buy them. So Kimberly-Clark's a really good company. If I just wait around, it's almost like fishing. I'm waiting for the fish to hit, and once they hit, you reel them in. In this case here, I wait for the stock price to get to a level that I like, and then I buy. They've been doing really well recently, so we'll see how their stock price is valued. I'll compare my value against the current stock price. In the earnings release, they announced that they organically grew the company. The amount of volume, meaning how many units of products that were shipped, went up 1%, and their price went up 4%. So overall, they had about a 6% organic growth for their business, which is what the market really liked. The company also guided that that growth is going to persist through the remainder of the year. A lot of the growth that the company's seen is in international markets outside of the US. And these are markets where they can really grow. For example, China, they're doing really well in China. So that's really good to see that these products are going to grow around the world. I think that Kimberly-Clark products are really well established in the US. So I don't expect much growth in the US, but internationally is a different story. Kimberly-Clark has grown organically and their margins have expanded. That's really good. Their margin expansion is attributed to just a better run supply chain. And I'm sure that they're benefiting from some of the lower shipping rates, which is good. But a lot of efficiency could be given credit to the people at Kimberly-Clark. So great job to all the people that work there. Their earnings per share is expanding. Another good sign that this stock is on the move upward. And you could tell that investors really like this earnings because they were just showing really good improvements to their business. If they can sustain these types of efficiencies and gains of market share and so forth, the stock will continue to rise. The company is on track to deliver more than $2 billion in free cash flow in 2024. I really like when companies understand that a lot of investors, value investors, and I would say the majority of investors really focus on free cash flow. In this case here, over 2 billion in free cash flow is a very good target. And if they're communicating it to the street, that means that they're probably going to hit it. They're probably going to be above $2 billion. The company raised their guidance for 2024. It's always a good sign when companies are raising their guidance, and they're going to grow much quicker than they first thought. They're going to be more profitable than they initially thought. And that's going to really expand their earnings per share. All good things to hear as an investor. I value companies based on free cash flows and their earnings per share. So Kimberly-Clark's really speaking to me as a value investor. I appreciate how they really focus on the partnership with investors and providing the information that I need to revalue their company and make decisions on whether I should buy more shares, hold, or sell my shares in Kimberly-Clark. The company has a market cap of $46.2 billion and they have revenue of $20 billion. So you're paying a little over 2 times revenue for the company. They're a good net income company. They pay a nice dividend of 3.6%. They also have a forward PE of 19, which is very reasonable for a company of this type, especially if they're announcing that they're going to grow better than first thought. You could see in the last 5 days that you had a nice stock rise, and it was good to see that investors liked this stock. I started to buy into the stock considerably in the middle of 2023, and I'm glad to see the stock rise. It's very good to see that Kimberly-Clark is growing their business, and they've been doing it for 4+ years. If you look at back to 2020 up to 2023, they had revenue growth top line for the last 4 years, and they're guiding that they have organic growth this year. So that all looks really good. It's good to see a business continue to grow. This is a consumer staple, so I'm not expecting them to grow very fast, but just the fact that they're growing goes to show that their products are desirable in the marketplace. They're competitive in the marketplace. Grocery stores want to carry Kimberly-Clark products. All those things, signal to me that the business is healthy. The balance sheet looks good. The debt to EBITDA is less than 3. So it goes to show that they don't have too much debt. So if push came to shove, they can pay off that debt. They generate really good cash flow and their overall debt level is not very high. Analysts cover this company and they all believe it's a good company, I would say, but they are a little split on what the stock price should have as a target. Some analysts believe it's as high as $153 per share. The average is $134 per share, which is below their current stock price. And some analysts think it's $111 per share. So it's good that a lot of analysts covered the company. I think they would all agree it's a good quality consumer staple. But we'll see how my valuation compares to what these analysts are saying. The earnings per share for this company is going to expand. It's expected to expand quite a bit in 2024, up about 33%. And in 25, it's going to expand 7% and keep expanding at a fairly reasonable amount. Earnings per share just means how profitable this business is going to be. So that's a really good sign for the stock. This is a good dividend paying stock. 3.6 is a good dividend rate. And their payout ratio is almost 94%. That is a concern that their dividend ratio is so high. It'd be nice to keep it under 50%. I don't use dividend rates and yields to value companies. I think it's the wrong measure, but it is a stock that I put in my income portfolio. It's a portfolio that I'm building to have income that can support me and my wife when we retire. So it's a really nice dividend to have in there. They also buy back shares, which is good to see. So you're both seeing a dividend and buybacks. So if push comes to shove, they could stop buying back shares and keep that dividend. I know a lot of people depend on the dividend, so it'd be good for them to continue to have this dividend and grow it over time. They have been growing it over time, so they should keep that going just to keep dividend investors happy. I valued Kimberly-Clark using the free cash flows I expect the company is going to produce. I also valued them using the earnings per share. And I came up with what I believe is a value per share of $130 per share. And that's lower than their current stock price of $137 per share. So Kimberly-Clark's being sold at a premium of 5%. Now, their stock has run up as of late, so that's understandable. A consumer staple, a really consistent company, dividend payer. It's not going to move. The stock price is not going to move, very aggressively. Let's say like Tesla is down 65%. Meta is up 444% from the low in 2022 to where the stock price is today. Those are huge moves, but those are technology, high growth companies. Kimberly-Clark, if it moves 20%, that's a pretty good move. So it's good to know that the stock is currently being sold at a premium. This is a good company, quality company. It's okay to pay a fair price for a quality company if I'm looking for more shares in a dividend payer. So good information to have. And I'll take this into my decision process, whether I'm going to buy, hold, or sell more of this stock. As I look at my decision to buy, hold, or sell, I'm going to look at the company, the balance sheet, the discount. I think the company is really good. It's a consumer staple. It's good to have this in my portfolio. I have an income portfolio where I want stable stocks that pay dividend or buy back shares. And this one fits right into that portfolio. So I really like the company. I like the business. It's products that people need. Their products, as I showed, they're growing their top line revenue. So it goes to show that their products are desirable. I also like that they're expanding in other markets other than the US. Good stuff. The management team's doing an excellent job. I think they're just doing a phenomenal job. And I really like that they communicate to their investors. I believe that investors in a company, they're partners. We're partners in owning the company, and it's good when the management really communicates to the investors. So, double check mark there. The balance sheet is in good health. It's under debt is less than 3 times EBITDA, which is very good. And their balance sheet's very consistent. As you look at it from quarter to quarter, year to year, it's very consistent, very stable business. The company is being sold at a premium, so I can't give them a check mark. They get an X on the discount. Therefore, I'm just going to be a holder of their stock. I think it's a really good company. And even if they continue to go up in price, I'd probably keep them because they really deserve a higher price. And as their revenue grows, earnings per share gets restated upward, free cash flows increase, that will make my valuation go up. And I could probably give them a better target price that I would have on the stock and probably change this to a buy potentially in the future. Or as if the stock, like many, has some volatility, then in the stock price dips, I'll be a buyer if it gets below my value. So we'll see how things go, but it's good to have information so that I can make a decision in the future. As I watch the stock price go up and down, I can track it and either buy or continue to hold this stock. Kimberly-Clark's a real stable company, dividend payer, really good to have it in my income portfolio. That's my video on this company. I hope you found it interesting, and I really appreciate you watching.